We've heard repeatedly that in important markets, the problem driving housing prices higher, perhaps to ludicrous levels, is a shortage of supply. Well, naturally, across the vast country, the situation varies from market to market. Let's get into it with the latest RBC property report. We're joined by Robert Hogue, Assistant Chief Economist at RBC. Robert, thanks very much for giving us the time.
Well, good afternoon.
Just give us, just remind us what's been happening with real estate this year. The Bank of Canada paused briefly the interest rate increases, and we did see something of a rally this spring in housing prices, didn't we?
Right. But then, and in terms of activity as well, but that came from a very, very low level. The number of home resales over the first quarter of this year was somewhere near where it was over the 2008-9 global financial crisis. So it came from very, very a low base, and prices have started to move up, and starting in March, and then more so in April and May. And but that wasn't like to varying degrees across Canada. It was most of the rebound was seen in Ontario and GTA more specifically, but also a little bit in BC. But other markets, things are not rising quite as rapidly. So it's more of a varied a picture. The missing ingredient in many ways to see the market take up a bit more altitude has been on the supply side. In the first quarter of this year, we had seen a significant decline in the number of new listings, but those have rebounded in April, especially May, and it looks like also in June.
So is there a shortage of housing? I mean, is supply anemic? Is that the problem?
Right. And this is pretty obvious, especially if you also include the rental market, where the vacancy rates are exceptionally low across most of Canada. And talk to any realtor, and they will tell you pretty clearly that inventories are low across Canada. But what we've seen in recent months has been the number of new listings coming to market now starting to pick up from low levels. So starting to potentially in areas like GTA rebalance the market a little bit that had tightened very quickly this spring. Mm-hmm. So if that trend continues, hopefully they will bring a bit more balance in the housing market going forward.
Well, you guys at RBC have long compiled this housing affordability index, but in some ways it's the housing unaffordability index. Has there been any improvement there?
There was, but very, very mild improvement over the first quarter of this year, and looking at what's happening now in the second quarter, if there's any improvement, it will be also very, very mild. So I think any Canadians waiting for significant improvement in affordability, they're just being very disappointed, or at least in the short term.
How responsive is the housing market to, I know this is a very broad question, but to short-term interest rate increases? Because we have seen this headlong move into variable rates, haven't we?
Right. And I think what we've seen was in the springtime was the sentiment had changed because the Bank of Canada was signaling starting in January that it was done raising rates, and at least it was pausing, and that it seemed to have been sufficient to warm up buyers that have gone on the sidelines, and they moved back into the market. But very quickly after the bank started to hike rates again in June, it seems that at least in some markets, and we're looking at more specifically at GTA and possibly Vancouver as well, it looked like it kind of rubbed off buyers in the wrong way. We've seen some of them sort of retreat. And it really goes to tell you at the degree to which the housing market is very, very it's hypersensitive to interest rate at this stage.
If rates go up, I mean, is there a risk of a precipitous drop in housing in markets like Toronto and Vancouver? Because it's like we've almost got to absurd levels of unaffordability, haven't we, in those markets?
Right, but if those markets were to completely collapse, they would have done so a long time ago.
Yes.
And I think the element there is what I haven't talked about really yet, is on the fundamentals are still extremely strong. I mean, we just talked about still inventories, even though new listings have gone up or in recent months, are still very low. But also on the demand side, we've got this huge increase in population. That's true in GTA, but it's true across Canada. That's increasing. Boosting demand for housing. No, it boosts demand for housing at large. It's on the ownership side, but also particularly on the rental side. So this is probably the reason why markets like Toronto and especially Vancouver that are really unaffordable that keep staying afloat more or less. And even price corrections that we saw during the pandemic, retrace only a portion of the huge increase that took place in the first 2 years of the pandemic. So really, those markets are really remain very strongly supported by fundamentals.